Olá, pessoal. Estamos aqui no Avenue Connection com Christian Fay, Senior Portfolio Manager da BNP Paribas Asset Management. Thank you, Christian, for coming.
No, thank you for having me. Yeah.
It's a pleasure to have you here at Avenue Connection. And to start, what do you think about events like this in Brazil?
I think it's great. This is the first time I've participated in this type of thing in Brazil. First time to Brazil. So, so far it's just been great. 2 days have been great.
You also joined a panel about small caps yesterday with William Castro Alves, right?
Yep.
And about small caps, what do you think about the U.S. current market and which sectors the investors watch closely?
Yeah, sure. So, one of the biggest questions we get from all of our investors is, when is the right time to invest in small caps? And I don't have a perfectly great answer because we think the small caps, depending on where you invest, are always a good investment. And so, yesterday we talked about all the things that are aligning up in the future that are going to help small caps as a sector, but then more specifically, specific companies that we're looking at, which we think can outperform the small cap benchmark. So, for example, we've had a lot of noise in the U.S. government with Donald Trump, with tariffs, with interest rates, with inflation. All of these things are negatives for small cap companies in general. And we saw small cap companies kind of really work well into the election last year. They went up off their bottom pretty significantly in November and December. And then when Trump was elected, and then he came out with some of his tariffs talks, small caps had sold off. And we think that the market now in the U.S. is stabilizing for the small caps because of those things. He got his big, beautiful bill passed where at least the tax rates for these companies and for individuals aren't going to change. They're not going to be going up. So that's one negative that's off the table. And then in terms of tariffs, he off across the board said they're going to be 30% for certain countries, and that's a negative. But now we think that more likely he's using this as a bargaining tool to, hopefully foster negotiations quickly. So we don't believe that the tariff impact will be as bad as believed. And so in coming into the end of 2025 and 2026, we think that's going to be take a breather and be a positive for small cap. So whereas small caps, for the last several years have underperformed, we think we're inflecting in the right direction because interest rates are finally going to be coming down most likely in 2025 and into 2026.
In this line, the Russell 2000 index is underperformed in 2025 so far. But if the Fed cuts the interest rates, what do you think about the small caps? You think the small caps can perform well?
Yeah, so let me just break it down before that. So yes, the Russell 2000 index has been an underperformer relative to larger cap indexes. If you look in the last 10 years, the small cap index is up, 150% or 200%. So that's pretty good, right? But large caps have certainly outperformed it. But if you take a closer look at the 2,000 stocks that are in the Russell 2000, if you break them into quartiles, so the top quartile is 500 small cap stocks. In the last 5 years, those have outperformed by 80%, beating the large cap indexes. That's 500 stocks that have beaten the large cap indexes. Conversely, the bottom 500 have underperformed by 60%. So my point is the index itself hasn't done that great because of the bottom quartile of companies, which we don't invest in. So if you're able to stock pick and find stocks in that top 500, you will definitely outperform. And if you look at our small cap fund, 10 out of the last 12 years, we've beaten our benchmark by 3 to 4%. When you cumulatively, that's a large effect over time. So we think when we look at it that way, we think small caps are a good place, even though the index itself hasn't been great. But to your point, when things start to improve, we see upward, the relative value of small caps is almost at its all-time low. It's come back a little bit in the last couple of months, but it has a long way to go. So we think that there's a runway for small caps.
What do you look for when you saw small caps, when you analyze in research? And how identify those potential small caps?
Great question. We get this from all of our clients. So our team is, we call it a very seasoned team of thematic experts. So for example, I have 25 years of experience investing in the healthcare sector. Our technology analyst has 27 years investing in the technology sector, and so on and so on. So part of our process and philosophy is to do real bottoms-up research from the bottom, not thinking about what's going on at the top so much until the portfolio decision is made. We analyze these companies, based on years and years and years of experience. And we think we have the ability to find those kind of disruptive ideas that other people and other funds aren't looking at. So that's kind of our advantage here. And so generally speaking, we think we just have an advantage because of that backdrop and philosophy of the team.
Perfect.
Yeah.
And what risks are more common in the small cap sector?
Yeah. So there's several risks. There's binary risk at the stock level, and we kind of deal with that with position size and timing of when we own the stock. And there's also news related and economy related issues. For example, you mentioned the small cap benchmark not doing well in aggregate, not doing very well. But as I said, you can find areas that are doing really well. So the risks are if the economy worsens, or if there's stagflation, or if the tariffs stick, or if interest rates don't come down. Those would be kind of negative signs for small cap investing, generally speaking, although we still think we can find idiosyncratic ideas that can buck that trend, that have catalysts, that have disruptive technologies, that can outperform and be in that top 500 quartile of the stocks.
That makes sense.
Yeah.
And about the future of AI, what do you think about this future, new technologies, and stuff like that?
So that's the second biggest question we get from investors is AI. Obviously, it's hugely impactful to the world, to the stock market, to our daily lives. We think it's just in its infancy. AI has been around for 20 years. It just hasn't been utilized by consumers. It's been utilized by big companies in certain areas. And so, the more it becomes cheaper and more affordable for companies and individuals to use, the more it will get used. There's something called Jevons paradox, where when the price is high, the utilization is low. When the price comes down because of DeepSeek or other reasons for it coming down, utilization ramps up. And when utilization ramps up, economies ramp up because of the efficiencies that AI can save for companies. So whereas a healthcare company that's trying to, design proteins for drug discovery, it would take them years. And the holy grail of AI is that you could do these protein foldings and conformational 3D things in AI and come up with a much quicker drug coming to the market, just saving lots of time and lots of money. But like I said, we're in the very early stages of this, but it's something that we pay, huge attention to. And it's across all sectors. It isn't just healthcare. It isn't just technology. It's industrials. It's consumer. It's every type of business that has data. It uses large quantities of data that AI can help manage quicker.
So, Christian, what do you think about DeepSeek and AI when you look for winner takes all, the race of AI, or other countries can you participate in this race?
Yeah, I don't think winner takes all is the way to look at it. I think there'll be a few large winners at first. And over time, there'll be some consolidation. Obviously the ones that come to mind are, Meta and Google and Amazon. The big ones they're certainly leading the game, but that's not to say they're going to always be that way in the future. But for now, they're dominating the spend. They're dominating where people utilize their technologies, but we don't think it's winner take all. It's such a transformational technology that it just can't be the case.
Yeah, thank you.
Yeah.
And about the future of U.S. markets and Trump tariffs,
Yeah.
like that, how you can see this tariff is, and what's the future of U.S. markets?
Yeah. Well, so that maybe the third biggest question we get. So it's certainly, in Trump's first presidency, we always knew that he liked tariffs as a negotiating tool and as an actual tool for, in his mind, raising revenue. Does it work that way? Maybe it does. Maybe it doesn't. I don't know. And then he lost to Biden, and Biden actually kept some of Trump's tariffs in place. So targeted tariffs we think are a good thing. Across the board tariffs for the whole world we think are a bad thing. And so it remains to be seen. We just don't think that Donald Trump in the end will tariff the entire world at such a high rate. It just is bad for business. It's bad for planning of businesses. It isn't good for inflation, and ultimately it's not good for consumers. So we think that he will dial that back to some level, which we don't know yet, 10%, not really sure. But I think that the market and if companies can figure out what that end point is, they can plan better and things will calm down and it'll be much more rational again versus, every day there's a different tweet about tariffs and, you're actually seeing the market not respond to those things anymore like they used to because they're starting to realize it is more of a negotiating tool. So in the long run, we still think tariffs will come down and, maybe that's a positive for the U.S. if it's done right, if it doesn't cause inflation, and if interest rates start to come down again, which we think that they will. The U.S. economy is really strong, driven by technology and healthcare and other areas. It's surprisingly strong given all the backdrop of what's been going on. You look at the data that comes out, every monthly, and things are improving versus going the other way. I had heard from European colleagues that U.S. exceptionalism is dead. We're not investing in the U.S. anymore. And it's just not the case. You can't avoid the U.S. Regardless of what you think of the politics, the companies are so strong, you just can't avoid that. So we think there's really a good case for, improved economy going forward too.
I agree with you.
Yeah.
Thanks.
Yeah.
Thanks. That makes sense. And thank you, Christian, for coming here today. Pessoal, então fiquem ligados nas nossas comunicações, acompanhem o nosso Avenue Connection de 2025 e obrigado mais uma vez por participarem.